Action. Todd Horwitz is Chief Strategist at BubbaTrading.com, and he's joining us now from Chicago. Todd, thanks very much for joining us. It was a pretty good session for the US markets today. In fact, the best session that we've seen in around about 2 months. But you think that today's gains might be short-lived?
Good morning, Matt. You know, it just shows you how perverse Wall Street actually is. We just had a rotten jobs number. We've got no growth in this country. We've got no retail sales. We've got a diminishing middle class, yet the markets were able to climb 1.5% and now push back towards the highs. I think what you're really seeing here is the biggest problem, which there's no place else to go with your money. So everybody's being funneled into the equity markets, and I see that as having a very ugly ending, very similar to the Titanic as it slid into the water. The markets will slide. Now, again, I can't tell you when this is going to happen, but you cannot put every investor in the world, especially people that don't want to be there, and that's the elderly and the savers. They have no interest in being in the market, but to enhance yield or try to get some money, they have to be there, and they can't wait to get out. And that is one of the bigger problems we're going to see here.
Well, you just said you don't know when you'll be able to predict that, but when do you expect these people will get out of the markets, the ones that don't want to be there?
Well, I think I would say that this year is not going to be a good year. I think this is more of a rally into a market that's going to go lower. I would expect this year to see somewhere between a 10 to 15% haircut to the market as is now, and I'm expecting significantly lower from there. I think if you get any raise in interest, which you probably will not, I think the interest rate cuts or raises are off the table for this year. But the minute you get any bit of interest, I think they will pull out. I think the minute you see some fear, we saw this happen early in the year before the February 11th bottom. We saw a lot of fear. People were falling out of the market. Anytime we start to see this happen, I think you will see a lot of people jumping ship, which I think will create even the bigger sell-off. And right now, if I look at the market from a technical standpoint, it looks more like a rounding top to the overall market versus a real rally. So me personally, I'm looking to sell into this rally, and I have been so far.
Okay, oil was a dominating factor overnight, but in the commodities space, you like the softs in corns and soybeans. Why?
Well, I think what you've seen here is you've seen this deflationary scenario. You know, I like oil as well, but I think oil is a little bit toppy in here. I think it needs to have a little bit of soft. But the softs have really been beaten up. Now, unfortunately, I wrote that this morning for you, and we had a report out, and soybeans are up limit today, so we can't really talk about that. But I do think that the soft market has been really beaten down, and I think those are great places to put money unless you think that we're no longer going to be eating in this country or around the world. The soft commodity markets where the grains, the soybeans, corn, are very good spots to park some money to look for some yield, which I think you'll get a better yield than anywhere else right now.
All right, we're out of time. Todd Horwitz, Chief Strategist at BubbaTrading.com, joining us there from Chicago. Thanks very much for joining us. Well, let's just give